There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits, or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
Welcome, Auvorians, to 29th of November midweek software strategy update session. My name is Steve Federal. I am Auvoria Prime CMA. I am your risk manager, as you guys can see it on the screen. I used to actually put this up. I think I probably need to get more, have a habit of doing it, but I'm essentially your risk manager. So everybody that is listening, messing around on their phone, doing, various things and, half-ass paying attention to me here, I want you to stop and repeat this to yourself 10 zillion times, unless you are an expert trader, in which case, congratulations. And it is. If you have no risk management or trade plan, and you blow up your account with incorrect and risking settings, we have no sympathy for you. So I will challenge you to develop a risk and trade plan that meets your tolerance, and then you can stay within the parameters of the settings if you are new to trading a live account or uncomfortable. There's nothing wrong with starting a demo first, okay? There's nothing wrong with running a demo for quite a while, right? A lot of people run a demo for a little bit of time and they'll look at a particular strategy that's been traded or some of Auvoria's products, which are all good, but there's risk to everything, right? So you have to test it out for yourself. Make sure you're with a broker that is not booking you, right? So there's a number of Forex brokers out there. There's a short list, but if you get with your upline, you'll see there's a number of brokers out there that are very good at what they do. I've come across 2 or 3, and we just can't recommend it to you on a national call, which I probably can. The funny thing about it, you can't say that. Anybody that has all the major national licenses like I do probably could, but I choose not to do it because, the FTX thing has taught us all, and if you guys are not updated with that, there's dominoes continuing to fall with a couple of other bankruptcies, and there probably will be more dominoes to fall out of this. I think it's really, really critical that, and this isn't really meant to be, and I think if I've taken any flack from the financial community, it has almost 100% been under the guise of the following. Hey, Steve, do you have to really be that brash and rude about this? Yes, I do. Because it cuts right through the crap, right? The colored hair and snowflakeness stuff that's floating around out there, the fairy dust, right? All that's doing is clogging your head with what's most important. And quite simply, the most important thing is having risk management. You see I'm highlighting here on the screen, right? You can have the best trade plan, and if you have no risk management, you're still going to blow your accounts out. So, close out of that. Let's go into the week. FinViz, haven't shown this actually in a while. Let's go ahead and talk a little bit about this. FinViz.com, I think he's one of the best on the internet. They have a elite membership, which does a bunch of stuff. They guess you be really good back testers here, really good screeners. Personally, I think you should spend your money on stock screeners on Investors Business Daily's website, which is, got that Morningstar Bloomberg type database out there, and it's much more affordable. And I think honestly, if you're going to be doing any kind of trading, as you see here on the screen, TradingView, in my opinion, is the way to go. Fast becoming the platform that is damn near, right? At least on the equity, Forex, and options side, I guess you could say futures too. It is really getting close to a Bloomberg terminal, minus the flashy keyboard and the $2,000 a month price. But the database isn't as deep as Bloomberg and is more of an institutional-based platform. But you know, I always use Michael Bloomberg's company as an example of sort of a high watermark. CQG and a couple of the Reuters platforms are kind of there. But the problem is most of the money it's spent on that stuff versus the $20 with TradingView is like night and day. So just keep that in mind. As far as trading platforms, you know, I have a lot of students always ask, you know, well, what does my platform look like? You know, if you just Google trading platforms on YouTube, the level of content out there and the exhaustive detail of how these systems are built permeates YouTube, right? All I suggest at the very core is one, this is just me because I'm biased, right? Don't be trading on Wi-Fi, okay? Unless you can prove you got some monster Wi-Fi, you know, $600 Asus router type thing. I'm just not a fan, right? I trade via a cord, right? The old-fashioned Ethernet. Got it plugged in both in my office and home trading systems, even though my on-the-road system when I'm traveling replicates both those systems. It can't do it in speed, in connection, or screen, right? Outside of that, and you know, my wife would joke that I only base the purchasing of real estate on what the fiber optic speed looks like coming into the place, but then that just saves a bunch of face because, you know, most of these fiber optic companies like, you know, Time Warner and, you know, certainly, which is the Spectrum now, Comcast, you know, certainly AT&T, and then you have Verizon. You know, many of these guys will run fiber lines. I don't know if you know this, but they'll run a fiber line as long as it's on the street in front of you somewhere. They'll run a fiber line up to your house. They're just not going to bury it. You know, or in some cases they'll bury it for you, but it's going to cost you 10 grand to do it, right, or more. So I always thought it was smart just bringing speed in. I told my good friend who lives over in Tampa, he lives on a full acre, and you know the fiber line was at the street. They terminated it for him. They ran the cable up, and then he just bought the piping and buried it himself for about 2 grand in the renting of a ditch witch, right? Which is an extreme example, but you know he's got super fiber speed into his house. He doesn't do any trading, but he does run a large ad agency out of his house. So in any case, those are my concerns as far as trading systems. You know, make sure you got solid speed. You know, you're not trying to trade off of your neighbor's Wi-Fi. I mean, the normal stuff, I mean, that truly is the core of risk management as far as setting up a trading system. You know, it doesn't have to be the fastest thing out there. It doesn't have to have a Ryzen chip on or be some sort of i9, you know, 8-core processor with, you know, 32 gigs of RAM, which is what I have as a setup here. But ideally, you know, there's plenty of systems out there that you can do. And now that they have monitors that you can just have one plug, you ideally now can put in a decent video card, which you should definitely spend some money on, and have 2 huge monitors running off of like I do. I've got 2 monster 37s running off of the big curves off of a really good NVIDIA card. But I mean, outside of that, you know, these can get as much as you want into these trading systems. Notice I haven't talked about trading on your phone. You notice that? Why do you think that is? 1, because I don't do it. 2, I don't abdicate it. Yes, I know the MT4 platform and all of that has an app-based trader. I just don't trade. I've never ever executed a buy order on a phone, ever. I've executed some sell orders because you're not really worried about, in the case of a couple of equity trades, I'm not as concerned about, you know, where I got fill that, because typically with market orders, especially with my brokers, I get filled almost instantaneously, but I just don't place trades on a phone. Now, you can love that advice, you can hate it, you can say, hey, Steve's totally crazy, but what you can't say is I'm not giving you quality advice, right? If you're dealing with big money, regardless of the way you view how you should set things up, at the very least, the core, it should be almost like step 2 in the Federal Risk Management book, which I think I'm probably going to write someday. Everybody keeps bugging me I should write a book. We actually got a good book, but it's not on trading. My partner and I, it's on investment management. But the step, or I should say it's almost like it would be before chapter 1, that you would really just think like you would as an institutional trader, right? So always have an institutional trader mindset, right? Does a guy that runs a credit desk for Credit Suisse, is he or she trading on their phone? No. So let's go into the charts after that long diatribe of core level risk management. Let me just close the screen down here. All right. FinViz, I got off topic. I'm going to stay on topic and non-tangential today now. So I haven't shown the screen in a while. I like to look at the daily charts and just so I can kind of see what's going on. If you trade any indices in MT4, I like the US 30, which I'm not really a fan of. But I prefer the S&P. You can see how these sort of correlate. So obviously Dow-based stocks, which are more utility, less tech. The index is higher because of that. The S&P is lower in terms of the rebound off of these mid-October lows, technically right into the beginning of October, second week, very early second week. We've had a huge rally. And this has all been on one thing. If you haven't listened to any of my casts the last couple of weeks, it's all been on this pivot, right? Now, in all fairness, there's been some earnings come in better, which typically in the long term run stock prices, and there's been a couple of ticks lower in inflation. But the market seems to think, which has gotten wrong more than a few times already, that the Fed's going to pivot. I just don't see it happening, right? So, but look how much the Euro Stoxx 50 has rallied, or the DAX. I mean, it's just crazy. It's like the top, this thing's almost like it's completely erased all of its corrections all the way up till the end of the first quarter. I mean, look at that. It's like there's no problems with the economy. It's crazy. Like I said, markets can remain irrational a lot longer than you can remain solvent. So just keep that in mind. We're telling clients we prefer to lighten up on these rips. Yes, the VIX has gone lower. You can see how the energy space has gone lower too, hint, hint. Always surprising when you move into the winter months and heating oil is going down, not up. Isn't that crazy? Canary in the coal mines here, folks. You just got to see it. Gold going up, which it should, because somebody's down there defending this 1650 zone big time. Just know that. Dr. Copper, it's really moved down from what was probably just a ridiculous rip up. Keep in mind that one thing we can, without any probably complaints from any analyst or trader nationwide or worldwide, dislocations galore going on between these charts, right? Bananas, as I call it. Hard to make any kind of rational long term where we just don't know what Federal Reserve banks are going to do. Are they going to stay put, right? Market seems to think they're going to stay put at this point, equity markets at least. And for that matter, it's spilling over into credit, which is boosted a little bit, right? So if you're out there all concerned about the mortgage rates, they're kind of coming down a little bit. Still ridiculously elevated, in my opinion, relative to where they were a year ago. But the consequence of this is, the absolute rip. And this is much better viewed noiseless on a weekly chart here, which I have not now. But just going back down to currency land, which seems like I have a tendency to get away from, but only because I want to teach you guys to understand the markets from a macro level. You can see, obviously, since this doesn't have any crosshairs on it, but since the peak of the US dollar here, just under 115, we've dropped basically $10. Consequently, that's made every other chart go up. So as you have a complete change of trajectory, if you will, right, bull to bear in the USD, you have to be willing to have flexibility to change direction. So for now, at least in a couple of the majors, right, Euro GBP, I'd be buying the dips, not in front of any news. So let's take a look at this week. So here we are on the 29th here. Actually, let me just filter out some stuff here. I don't really care what's going on in orange and yellow land. I only care about red land here. Here we go. So I don't think this is going to be anything important. Unless he slips and says something like, yeah, we're thinking about maybe like holding off on rates. That fact's the case. You get as long US 30 as you possibly can, because we are going to be seeing the largest short-based barbecue rally on record. But we still have many months of looking past anything that has to do with CPI. I don't care what country it's from, right? Obviously, the U.S. is, more important, at least for traders in this country trading our markets. But anything that's CPI, as much as month over month, year over year, any of these types of numbers, they are top in importance right now, and they must be viewed as such. But for those wanting the whole story, do keep in mind we have NFP. Which I've never really liked that acronym. I just talk about employment, right? Nobody cares about farm employment, so they break it out. And employment. So the unemployment rate, 3.7% here in the U.S. Will that change? Will the Fed make any changes? I don't think it. The Fed doesn't really care about anything. They care about one thing right now, and that's reducing inflation. The problem is I've talked a lot about, I'm not going to get into it anymore, is that you cut enough of the knees off of enough people, and they can no longer do anything, right? So then we go into a spiraling deflationary period of time. And when companies lose pricing pressure, what does it do to their earnings? They get clobbered, okay? If they get clobbered, markets follow, right? And then it is a mad rush into the worst of all evils, which is typically utility stocks, because come hell or high water, people pay for the bills. First, shut the power off, right? Yeah, that's kind of all I want to say in that area. Weekly charts, just going to give you guys an idea. Everything else is going up except for the dollar. That was not the case for the majority of the year. All bonds were going down. Now we're actually slightly heading up in credit land. See that? Just a wee bit, right? Not much. I do find it amazing that all of the realtors, remember I told you guys, I know there's probably realtors who are going to listen to this, they're going to hate me when I say this, they are a one-sided, one-trick pony, and it's called the market's going up forever and buy only, right? They're never going to give you the real story. I don't care how good the analyst is. If there's something after their name says real estate board, throw everything they say in the toilet, because it doesn't matter. Maybe it will in a bull market, right? But right now we're just seeing a gluttony of homes hitting the market. We're also probably should see a lot more, but quite frankly, there's a lot of people out there in this camp. Wow, I'd like to get a better house, but there's no way I'm giving up this 2.99% mortgage, right? So I'll have my 500 grand house, whatever the number is, and, I'm not gonna do it, right? It's a little different in vacation and retirement areas like in Arizona, or maybe certain parts of Tennessee, Texas, and certainly Florida, because you have a lot of cash buyers. So they'll still come in and just pay cash for the place, depending on the price. Obviously, anything over $1 million, much less chance, unless it's in Miami Beach, or places like that. But the cash buyer still can reign supreme, regardless of what mortgage rates are doing. The problem is that somebody's selling a house, regardless of whether they're going to get a cash buyer or not, you got to find another place to live. So unless you own the place, right? Not everybody owns their house. Unless you own the place, There are a chunk, obviously, that do. You're not interested in selling right now. Because one, you know you're going to overpay. And two, God forbid, if you don't own the house, and you did refi, and you got this ridiculously low mortgage rate, you have no interest in going to a 6% mortgage rate. Because you'll sell the house, and let's say you're buying you're selling a 600 grand house, you're buying an 800 grand house, right? Your mortgage rate is significantly higher than the 600 grand house. In many cases, it's 2/3 higher. It's almost double, right? So you're not going to do that. I mean, even smart people that want to move up to a better residence, unless you're paying cash, which is a different story, you don't care about any of this, right? But so long story about at least how I view the real estate market. But the point I'm trying to make is, and it is a long-winded one. Look at the price of lumber. Historically, what if I take it to monthly, right? Let's look over the whole history. Why isn't this expanding out? Look over the whole history of lumber, right? They only have data back here to 2009, which isn't really the greatest. But look, I mean, we're at it's funny how we're almost sitting on the center line from a market profile perspective. You can kind of see this here. We're almost sitting on the center line right here. So if you're wondering why there's support here, you can kind of know. I mean, if I overlay a market profile chart, the point of control center point somewhere probably right in here. But it's low. This was inflationary. Now we're in deflationary. We're just getting demand of lumber's off. Well, hey, the housing market's booming everywhere. This is what you hear from the real estate people. Now they're starting to crack. I mean, it's like the prices at the gas station, right? They'll rip them up in 3 days, right? But then the prices are way down in oil and crude and, RBOB gas futures. You don't see the price changing at the place until, Bobby across the street lowers and then Sally does, right? And then competition eventually just drags the price down. It takes forever, right? It's kind of the same thing in real estate. So, that's what I have to say in real estate, but that could be canary in the coal mine. Could be a reason why gold's going up. All these inverse correlations playing out. So I'm just trying to stay big picture here. I went into a lot of detail on this stuff over the weekend. Prices, levels. I'm actually not going to address a lot of that right now. I will jump into the system and just take a quick look at, no, not the Vanguard short-term fund. Oh, this is a pretty good fund though. They just upgraded these dogs, by the way. This is a very, very short-term fund. It's got about a 6.25 yield on its inflation protected. Pretty slick stuff, all for 6 basis points in cost. Let's take a look at the S&P. I see kind of a triangle fund, don't you guys? And let's go to daily. Actually, that didn't help us, did it? Yeah. Let's go back to weekly. Too much noise. The beauty of long-term charts, right? So you can see how we climbed up in the Fed easing, right? Remember I used that example of all the children sitting in a circle with a whole bunch of apples? Okay? Now you have the opposite side. All their children are putting their apples up for sale, right? They're not holding it anymore. They're throwing them in a circle. So, what happens from here? I don't know. I thought I knew over the weekend, took a closer look at the charts, I'm not really sure. The point we are trying to make for a lot of clients here, actually, let me just, sorry, I got phones ringing off the hook here. Welcome to brokerage land. But from the standpoint of the rally that we've seen, which is a lot more illustrated on a daily chart here, why am I not? It's almost like something happened. Let me just do a refresh. Reset the scale. So here is, do I care about that? Yeah, I do. I always like to try and take a look back a year from a market profile perspective. You can see how the center point, where most of the volume was executed, was much higher, obviously. It's because we spent a lot more time up here. But we've had this entire rally off of the bottom because of all that pivot stuff I've been talking about. Don't get me wrong, there's other factors involved, right? I mean, I just try and touch on the most important stuff. But as far as looking at, the rally we've been telling clients that if they're heavy in equities, just lighten up. If you guys need the money for any reason, or for gosh sakes, if you're retiring and you're 100% stock in your portfolio, do yourselves a favor, take some off the table on this pretty decent rally, because there's a good chance we go back down to 3,500, which we're probably going to do, especially as if inflation stays strong. Keep in mind, Black Friday, guys, those numbers were pretty good. What's that tell you? The pain hasn't hit the common, slightly upper middle class person yet, right? If the pain hasn't hit, they're still paying higher prices. Doesn't mean it can't come down a little bit, right? But man, when I saw those Black Fridays, I'm like, man, the market ain't reading into this. So I could be wrong. We could be going back down. But if we go back down to 3,500 again, I'm not sure it's going to hold. So that is, and you can play that out into any other equity chart you want. It's going to line up the same. It's just a general discussion. Let's take a look at crypto. I got to tell you guys, it's really kind of funny as this whole meltdown, which has been quite intriguing from just like a macro standpoint. I started following a couple guys on Twitter. One of them's called BitBoy. This is no, waving wand of approval for this guy. But you can Google him. But this guy, BitBoy, I forget what his name is. Someone's first name, Armstrong or something like that. He basically went down to Nassau, right in the Bahamas, and he went down to the Sam Bankman fraud guys, his, some super penthouse he lives in down there. And they're basically they got all these big Bitcoin dogs that own, like exchanges, like this Binance guy, and they got all these guys in this chat room. This was totally fascinating. And they're basically just forcing this guy to get out of, and come talk to him, right? Because and the funny thing is the Bahamian authorities, I thought this was really interesting. The Bahamian authorities haven't taken one complaint on this SBF guy. And they can only arrest somebody if somebody files a formal complaint to the Bahamian police force, right? They get a pretty organized group, right? It is a party island, so I'm not sure how good these guys are. But they were, I was just shocked to hear that. So they posted the phone numbers of all the detectives in the Bahamian government. It was really funny. So I would say if you guys got stuff that's just been axed and just evaporated in SBX land, jump on Twitter, follow this guy. He's got millions of followers across all kinds of platforms. Man, he is down there working for the common man. I got to tell you, I was really impressed. They're having some big crypto conference in Miami, which is going to be completely shadowed by these other events and a couple of bankruptcies that took place already and other stuff. But, as these dominoes start to fall, as I told more than a bunch of Auvorians that called me, big builders are like, hey, I got all kinds of money stored in cold storage. I'm like, yeah, I don't know, man. You see enough of this stuff start to fall, there will be no liquidity for cold storage in terms of conversion, right? Now, that's Armageddon stuff. But I can tell you this, some of the people that called me, which I talked about on Saturday, they had hundreds of thousands of dollars in cold storage. Oh boy. Unless you're worth 20 million, that's not a number I would have. I would definitely have more liquidity. And, this is coming from one of the biggest skeptics on Wall Street. But I still would rather have my money at the Fidelities and the Schwabs and the Interactive Brokers and the Chases of the world, right? Kind of where I have most of my money, than any of these other places. I guess I should probably mention Dorman too in the futures markets. Those are where I have all my accounts. And that's not an endorsement of those guys, but Charles Schwab goes under. As a AAA rated company, we're all in trouble globally. So that's kind of why that's the advice that I think is low risk management at this point, from the standpoint of stability of your cash reserves, right? Whether it's sitting in, a money market or some sort of short-term ETF, or, something related to that. The key really is just to have, and it doesn't have to be all in gold bars in a safe or cash under your mattress. I mean, a lot of this is just sort of like extreme out stuff. But I think it's important to understand that, you have to be in a position for liquidity. If some sort of huge exogenistic event comes down and starts killing all this crap, you're not going to be able to get that out, So, as my comments on the Bitcoin, as I say, hopefully every week, I could be wrong. Please do your own research. And with that, I will bid everybody farewell. I will see you on Saturday for the Saturday edition. This particular Saturday edition is going to be a little bit different because I'm going to be focused. I'll give you guys a little sneak peek for those that stuck around, see how it pays off for you. Let's see if I can. It's going to be titled, let's see, the same thing I spoke at the Orlando event, The Holy Grail in Trading. And that's all I'll say. So, because I've got a couple other pieces to share on that. So if you guys want to join us on Saturday, as always, these recordings will be up on YouTube and Vimeo in a couple of days, or maybe tonight, depending how fast they work. They're usually pretty good. But I'll bid everybody adieu, and may the trades be with you.